Hi, this is Matthew Cratter from Trader University, and today we're going to talk about whether we're currently in a bear market. I've been getting this question from a lot of you, and it looks like the Barron cover jinx is still in full effect. This is the cover of Barron's, the financial publication from January 13th, 2018, Bright Outlook for Economy and Stocks. And if we look at a chart of the S&P, you can see January 13th is right about here. Right before we've had a big run up and right before this huge volatility started. So I want to make an analogy to what happened previously in 2007 at the end of the last bull market. This is quite common at the end of a bull market to have a period of very smooth grinding up. So you can see this is from late 2006, early 2007. And this is a chart of the S&P daily chart. It's trading above the 50-day moving average. 50-day moving average is above the 200-day moving average, which is the red line. Blue line is the 50-day moving average. And you can see there are a couple blips, but it's mostly just a very smooth drive upwards. And this is a very low volatility environment. Everyone buys the little dips. And basically, if you buy stocks in this kind of environment, you'll just be making money day after day. And when you do get a blip, as we did in the first quarter in March of 2007, you get a very fast recovery, and then the low volatility regime returns. And you can see the daily range of each day is quite small as well, the up-down amount. Let me just scroll in a little bit more. So you can see daily range is fairly small with a couple blips. Now fast forward to the beginning, to mid-2007, beginning of 2008, and you can see the daily ranges for the S&P have really expanded. You're getting huge moves up and down. And you move from a slow grind upwards to a much higher volatility regime. And as part of this, you'd expect to see the VIX moving up as well. And you can see that the S&P is trading, it's getting even below the 200-day moving average, the red line. And you're getting just this huge chop, big up days, big down days. And then what happens is you get a moving average crossover. The blue line crosses below the red line. And this was the beginning of the great financial crisis, the beginning of the big bear market from basically late 2007 through March of 2009. So to recap, you basically go from low volatility regime to high volatility regime, much more chop, and then you get a moving average crossover, and then look out below. So let's see where we are now. We've had something very similar. 2017 was this is the S&P in 2017. You can see it was a very smooth grind upwards. And the S&P was trading above the 50-day moving average most of the time, which was above the 200-day moving average. Very, very smooth. And then we get this jinx in the Barron's cover. And then since mid-January, we've really been in a high volatility regime, as you all know. You know, the Dow being up or down 300, 400, 500 points on a day. And you can see we're still, the blue line, the 50-day moving average is still above the 200-day moving average. But I think the really key change that has happened in this the beginning of this year, 2018, is we moved from this very smooth grind upwards, this low volatility regime, to a much higher volatility regime. And that's one reason that the VIX has been staying above 20, has been staying quite high. So this looks a lot to me, especially the fact that we've been in a bull market for 9 years. That's fairly long for a bull market, and we're definitely due for a bear market. So I would expect the next sign, if this is going to turn into a bear, is you would get this 50-day moving average for the S&P to cross below the 200-day moving average. And if that happens, you'll really want to take a good look at what you're holding in your portfolio and really know your time horizons really well. If you want to learn more about bear markets, I've got a chapter in my book, The Little Black Book of Stock Market Secrets, which you can get on Amazon. And there's a chapter in there on how more ideas on how to trade a bear market. And I'll stick a link for this in the description notes below. Thanks for listening, and I'll see you in the next video.